Welcome to Bloomberg Markets. I'm Shonali Bassick, and let's get a quick check on these markets to get you started today, because the S&P 500 has been hovering around flat territory for the bulk of the day. It has been trying to break into the green. We are getting there slowly. We have the 10-year yield, though, has been rising throughout the course of the morning. It's been fluctuating, but now about 2.4 basis points higher. We're looking at the 10-year around 443, so a little bit elevated relative to recent weeks. Bitcoin, though, also elevated. You're looking at Bitcoin right under that $120,000 mark. A lot of excitement heading into what Washington is calling Crypto Week. We'll see how much comes out of that and whether that will be a boost for the cryptocurrency. And you're watching crude also lower, about 1.5%. The energy index dragging down the S&P a little bit here, but we'll keep an eye on it. The day is still young. Now, President Donald Trump meeting with the Secretary General of NATO at the White House earlier today. One of the main topics of conversation was how to end the war in Ukraine.
But we're very, very unhappy with them, and we're going to be doing very severe tariffs if we don't have a deal in 50 days. Tariffs at about 100%. I'm disappointed in President Putin because I thought we would have had a deal 2 months ago, but it doesn't seem to get there. So based on that, we're going to be doing secondary tariffs if we don't have a deal in 50 days. It's very simple. And they'll be at 100%. And that's the way it is.
Here with more, Bloomberg Balance of Power co-host Kailey Leinz. When you think about the war in Ukraine and you think about the president's broader strategy about approaching broader Europe, how are things going? How are you pairing the discussion going on right now between national defense as well as battling the two-pronged approach between the tariff strategy as well? A lot going on in Washington this week.
Yeah, there certainly is, Shonali. And if you ask President Trump how he thinks things are going in terms of progress toward actually ending the war, it's very clear that he's been disappointed with that lack of progress, frankly, expressing once again that he is frustrated with Vladimir Putin when he was making these remarks in the Oval Office, suggesting he would have what he would describe as a lovely conversation with Putin, and then Putin would send more missiles toward Ukraine overnight. So that is his frustration here and why he is stepping up efforts, not just on the weaponry front to provide more weapons to Ukraine, including Patriot missile systems, which we learned today will be happening in the near future, weaponry that will be coordinated through NATO and, according to the president, paid for by NATO. The U.S. isn't going to have to actually expend anything in order to get those systems to Ukraine, according to President Trump. But then the other part of this, of course, is increasing the economic pressure on Russia and countries that are assisting Russia either directly or indirectly by buying things like Russian oil and allowing Russia to continue to keep cash flowing in order to fund its war effort. And that's why the president is suggesting now 50 days is a new deadline. If there is no deal, then he will impose a 100% secondary tariff on Russia, not secondary sanctions, which is, of course, the terminology and the tactics that we're used to. Secondary tariffs, he said, though he didn't get into much explanation into what exactly he is thinking of or what kind of countries could be targeted. But he's previously suggested countries that buy Russian oil and gas like China and India. He also suggested that this would effectively serve the same purpose as the sanctions legislation that is gaining steam in the United States Senate. Senator Lindsey Graham, of course, is the one who is really spearheading that legislation. It has more than 85 co-sponsors. That would impose a 500% secondary tariff on countries that help Russia. But President Trump today said 500 is sort of meaningless after a while. He said 100% tariff rate would serve the same function, to use his words.
I also want to drill down on this headline that he's promising more weapons for Ukraine, but importantly, paid for by Europe. How important is the second part of that sentence, given that if you do have an expanded amount of financing for the war in Ukraine in the U.S., it actually would put a lot of pressure on Congress as well. And what my sources are also watching out for, Kailey, is the threat of a government shutdown later this year.
Yeah, well, that funding deadline is coming up on September 30th. Shonali, it's not clear yet what kind of deal can be made on appropriations in order to clear that. And it's also not clear that there is congressional appetite to actually pass more funding from the U.S. to fund Ukraine's war effort or weapons that would be in assistance of that war effort, which is why it's critical that the president made clear today that this is not the U.S. expending more money in the name of helping Ukraine, that, yes, they will be providing the weapon systems. NATO will then be essentially taking over those systems, deciding how they will be deployed and paying for those systems. To hear the NATO Secretary General Mark Rutte talk about it in the Oval Office earlier, he said, once again, this is Europe stepping up, which is something that President Trump has long maintained was his objective. He wanted to see Europe stepping up more in its own defense and paying more, hence why it was so critical that at the NATO summit last month, all of those countries agreed to spend 5% of their GDP on defense. That was seen as a very big win for President Trump, and perhaps part of that spending is now going to be focused on specifically buying U.S. weapon systems in order for Ukraine to defend its own skies, as it's still dealing with a volley pretty incessantly of Russian drone and missile strikes, often against civilian targets, which is what is frustrating President Trump to such a great degree. It doesn't seem that his frustration is to such a degree that at this time he's willing to push for more direct U.S. funding for Ukraine. But obviously, this is an ever-evolving situation, Shonali, and we've certainly seen his tone shifting over the course of the last several weeks.
Kailey, Leinz out of Washington, we thank you so very much for your time today. Now, private investment firm 1789 Capital has ties to conservative power players like its founders, Omid Malik, Rebecca Mercer, and of course, Donald Trump Jr., who is now a partner there. It also now includes former Citigroup's co-head of equity capital markets in North America, Paul Abrahimzadeh, who joins us now. Kailey and I were just talking about defense and the need for more defense spending, for the need to really ramp up the American presence as it pertains to what you're seeing both in the Middle East as well as Ukraine. Now, you have been part of the round of Anduril recently. At the same time, you see traditional companies, Lockheed Martin, trading kind of flat to lower very often in public markets lately, but Palantir and OpenAI really gaining the spotlight. What does this say about the future of defense spending and how your company is willing to put work on defense?
Thanks, Shonali. Traditional defense companies are critically important, and they play a very meaningful role within the U.S. economy and also protecting our borders. The reality is, though, as we're seeing with every sector across the country, technology disruption is coming at an incredibly rapid pace, and defense tech is a prime example of that. We were fortunate to be in the most recent Series G round for Anduril. They raised $2.5 billion at a $28 billion pre-money valuation. The KPIs for that business are exceptional, and it's really driven by three things. First, the increased defense spending expected domestically in the U.S. to protect our country. Second, if you look at the president's achievements with NATO, for the first time in history, getting NATO countries to contribute 5% of their GDP to military spending, up from 2%. That'll be a large tailwind for global defense spending. And then third, this pivot towards drones and technologically driven AI-incorporated warfare. All of that is going to be important. That plays into the hands of defense tech companies like Anduril and others in our portfolio.
It's interesting. You yourself have recently moved to South Florida. You have a lot of big private capital players that are drawing into their closeness to Washington. Carlyle comes to mind for me as one of them. Carlyle, KKR, both known in the space of defense. How do you see private capital changing their strategy around defense, given what you're saying about the role of technology and AI?
I think the private markets right now are giving you a great lens into what to expect in the next 3 to 5 years from a public capital markets perspective. You've got a lot of now scaled late-stage private defense tech companies that in just a number of years have achieved meaningful revenue scale, very strong growth based on the trends we talked about. And ultimately, those companies are going to be public at some point in the near to medium term. They are going to be what we believe to be fantastic public stocks and ultimately playing into the thesis we just talked about. This is an industry that was relatively nascent 5 to 10 years ago, and now with companies like Anduril or Shield AI or Saronic, Firehawk, Hadrian, they're now achieving a scale that's putting them on the map alongside some of the best-in-class AI and software companies in terms of the investable landscape in the private market.
Speaking of AI and software, 1789 has been a part of the Elon Musk universe with xAI, an investment there too. Of course, a lot of changes there. Why? What is the promise here of xAI, and what does the public not see in terms of how the AI company and the social media company can create a bigger giant in the future?
Elon is by far one of our generation's best entrepreneurs and technologists. He clearly is incredible at building scaled N-of-1 businesses. And the reality is, as we look at xAI, we think it has massive upside potential. We've invested in multiple rounds of the business. Clearly, there's a lot of competition in the form of OpenAI and Anthropic at the top of that group of LLMs. xAI has a number of different levers, not the least of which is the fact that he combined X with xAI. We were invested in both companies at 1789. Elon was a first mover in acquiring feedstock that is critically important as the data set to then drive everything coming out of the LLMs. We saw in the form of Reddit's IPO disclosure ahead of that transaction that they were starting to charge for their data. That can ultimately be a very costly input for LLMs. And we think Elon was very early to make that decision to integrate the two platforms. Also, the ability to cross-sell between xAI and X, taking the 600 million user install base at X and getting them to adopt Grok, we think is a very valuable upside opportunity for xAI.
I want to pull up a tweet by Pierre Ferragu, who is an analyst closely followed when it comes to Tesla stock. The reason I want to pull it up is because he talks about how he's going to terminate his ChatGPT Pro subscription to only keep Grok 4 super heavy going forward. You can see what he's saying right there on the screen. How do you get comfortable with Grok after the most recent hallucinations and reference to anti-Semitic posts? Does that not concern you as an investor?
It's definitely concerning, but I think the reality is all of the LLMs are subject to hallucinations, and they're going to have to course correct any errors made by their platforms. And I think Elon was very quick to do that. So that's just part of refining these models. It's unfortunate, but it's been addressed. Kudos to Pierre. I think he's spot on. We believe in Elon's ability to drive xAI and Grok on the fastest path towards AGI. And I think everything Elon has said recently is highly encouraging in terms of achieving that very quickly. Keep in mind, he's built this incredible business empire, and you don't need to look further than SpaceX, which is another portfolio company, investing $2 billion in xAI. Elon's ability to pull levers across his portfolio of scaled trillion-dollar-plus equity value businesses is incredibly valuable. And it's frankly a moat that other companies don't have.
We've recently reported that SpaceX could be looking at a valuation of $400 billion, making it ever more the most valuable private company in the United States. You get to see a lot of private companies. Is this type of magical valuation reserved for Elon Musk, or are you seeing valuations rising in other pockets of the private markets as well?
I think first principles of investing is always to try and identify a big problem with a large moat. And if you think about space, Elon is solving a huge problem that was frankly a vacuum left by NASA. You could argue it was underfunded over the past 20 to 30 years. Elon stepped in the private market, built SpaceX. It is an N of one. There is no competition at scale in space. He's proven that. He's also got Starlink, which is incredibly valuable. And frankly, redefining next-gen telecoms and the ability to communicate and access Wi-Fi anywhere in the world. So we think it's a super valuable platform that has still meaningful upside from this most recent mark. And again, his ability to partner across his portfolio of companies is highly differentiated.
Is it important for you as an investor to see Elon Musk repair his relationship with the White House?
I think that's up to Elon and the president, and we're hopeful that that's addressed. Ultimately, his companies are incredibly important to the U.S. economy, and he's a leader in defining new industries that he's breaking into, whether it's EV, whether it's AI or space. And so we're hopeful that all of that is copacetic and hopeful for a near-term resolution.
So, switching gears here, one of the reasons your team is in New York is because of a SPAC merger. Paul, you worked at Citigroup the last time SPACs were hot, right? Were you surprised to see the SPAC market come back this year as hot as it has?
No, listen, I think if you look at where the market is trending year to date, the broad market's up 5 or 6%. But if you look at ultra high growth businesses, they're dramatically outperforming the market. SPACs tend to be levered towards earlier stage high growth industries, and not surprised to see that asset class performing well. Grab-A-Gun is the company that CLBR, our second SPAC, is taking public. It is, at this point in time, one of the best performing SPACs we've seen post-pandemic. An incredible achievement. Redemptions were announced on Friday. Virtually no redemptions, almost zero.
Many of these SPACs are Bitcoin treasury companies right now. Is that not screaming froth to you?
To some extent. I don't think you need to look further than the IPO market in the case of Circle from a stablecoin perspective to show the astronomical performance in the aftermarket, the sky-high valuation. It's really less about the product and more about the asset class, meaning anything levered to crypto right now is incredibly well bid, whether it's the crypto asset itself or the equity derivative in the form of an IPO or a SPAC merger.
Paul, really great to have you here with us today. That is Paul Abrahimzadeh. He is 1789 Capital partner. Pretty new job, by the way. Thank you for joining us here on set. Now, coming up next, Mark Zuckerberg is making a bold bet for Meta's future. The latest on that and other stocks moving today. Next, this is Bloomberg. This is Bloomberg Markets, and I'm Sonali Basak, and it's time now for our stocks of the hour. A couple of movers that caught our attention this afternoon. We're going to bring in Bloomberg's Isabel Lee to break it down for us. Isabel.
Hey, Shonali, first up, we have to talk about Bitcoin. So Bitcoin breached $120,000 for the first time, with investor enthusiasm really showing few signs of dimming. So this week, we have the U.S. House of Representatives preparing to consider key legislation during its so-called Crypto Week, which starts today. As you can see the board, it's green on the screen. We have MicroStrategy, Robinhood, Coinbase, and Mara Holdings, all up more than 1%. Also noteworthy is Coinbase. We have Argus Research initiating coverage for the stock and has a recommendation of buy and a $400 price target. Up next, we're looking at Autodesk. So this stock is also rising. You see shares are higher by 6%. This comes after reports that it's dropping its pursuit of PTC, which would have ranked it as one of the largest deals this year. You see shares of PTC down almost 2%. So in a regulatory filing today, Monday, Autodesk said it remains focused on executing its strategic priorities, which includes, quote, allocating capital to organic investments, targeted and tuck-in acquisitions. And last, we're looking at Meta. We also have to talk about this one. Shares are up by just 0.8%, barely moving, but really big news from this company. Meta said that it will invest hundreds and billions of dollars in computing to build super intelligence. We have Mark Zuckerberg's comments coming in a post of Threads. And as we know, Meta has really been aggressively chasing high-profile acquisitions and multi-million-dollar pay packages to attract the top talent. In April, the company said it may invest as much as $72 billion. Do you see shares there almost up by 1%? Back to you, Shonali.
Isabel, thank you so very much for your time this afternoon. Now, coming up next, Panasonic's newest battery plant in the U.S. is on track to reach full production by later this year. We're going to bring you more on our exclusive interviews next. This is Bloomberg. This is Bloomberg Markets, and I'm Shonali Basak. Earlier today, Panasonic's North America's CEO spoke exclusively with Bloomberg Tech co-host Ed Ludlow at the new $4 billion battery plant, which is expected to be the largest EV battery plant in the world. It comes at a curious time, though, as the big, beautiful bill is set to let EV credits expire. Let's take a listen on what there is to say on the issue.
So this is more than a 10-year vision. We wanted to do this, and we wanted to go big in this market. So we had a commitment, and we started in Reno, Nevada, and this is our factory that we're diversifying our EV strategy, and we're going to be full production this year, and it's really exciting. Today's a fun and exciting day, and this is a celebration.
Full production this year?
Yes.
So cells are already coming off the line?
Yes.
Could you just explain the roadmap for the ramp? Because no facility is straightforward, but this is the size of 200 American football fields. How are you going to get to full capacity this year?
So we started in November 2022, 2.5 years ago, and it was all flat field, and it was a massive land. And we started the construction, and we started the production and testing last week, and we're going to produce the batteries this year. And you probably saw the cars that we have in display, and Tesla, Lucid, and Hexagon truck. And we're really excited to work with different suppliers and partners and clients this year.
We're going to discuss in detail those customers. They're really key to this. There were media reports Friday night that there would be a delay in reaching full capacity, and what the report stated was that was due to demand. Are you able to comment on that report? And it sounds like they were misinformed if you are going to hit full capacity this year.
I do think it was misinformed, and we're a Japanese company, and when we say, when we commit to something, we're fully committed, and we want to make sure that we support all the customers that we're committed. We're not feeling the slowdown yet, and we're very, very bullish on working with all those customers.
When you say you're not feeling the slowdown, that means that you're seeing consistent orders from those key customers, or they're still committing to orders in advance? What do you mean by the definition of what you just said?
So we have the operation in Reno, and that's going very healthy, and we're seeing the commitments coming in for this facility as well. So we're not feeling the slowdown yet, but yet again, I mean, you see this operation, this is a long-term commitment. So there may be some pushback or moving ahead, but we're committed for a long term, and we're not shying away from those from time to time challenges.
That was Panasonic North America CEO Megan Myungwan Lee and Bloomberg Tech's co-host Ed Ludlow. And it brings us to a bigger question facing the EV battery industry. President Donald Trump's tax and spending bill might weaken the U.S. demand for electric vehicles. And our next guest says Trump's EV retreat could hurt U.S. standing in the global market. Bloomberg NEF Evelina Stoikou is here with us. She is the head of battery and technology supply chains at Bloomberg NEF. Now, you look at the push-pull between companies who are trying to build in the United States versus the forces that you have both from the demand side as well as the government, let's say, subsidy side. How do you think about those cross currents from where you sit?
Yeah, for sure. So in the battery industry, one way to think about it is how the demand side and the supply side interact with each other. And oftentimes policy can really drive and incentivize both supply and demand for batteries, both in the terms of EVs and stationary storage. What we're seeing at the moment is actually policy introducing some headwinds for battery demand. As a result of the new bill that we've seen, there's going to be impact on EV battery demand. However, a big part of the momentum is also driven by consumers, and it's not driven by policy.
I was going to ask that because if demand from consumers is going down, but building is increasing, then wouldn't the outcome be that prices just decline?
Yeah.
In just 10 seconds here, sorry, we're about to hit a heartbreak, Evelina, my bad.
Yeah, absolutely. Yeah, so it is true that we are seeing pushback and hurting EV battery demand.
Mm-hmm.
However, because of the new supply, we expect to see battery prices going down. So more supply is going to be helping.
Evelina Stoikou of Bloomberg NEF, we thank you so very much. That does it for Bloomberg Markets on a flat trading day. Stick with us through the close. This is Bloomberg.